Hello everyone. So in our previous video we have discussed in a very brief manner the names of the categories in which the companies can be classified based on their market cap, that is large cap, mid cap or small cap. In this video we will be discussing in detail about large cap. But before we dive deeper into large cap, in case you have not watched the previous video, I would suggest you to watch it. I have attached the link below in description where I have explained about what is a market cap in detail. So now coming to what is large cap. But wait, before diving into it, for people who want a brief understanding of what is market cap is simply the price you need to pay for buying an entire company. It is simply the share price multiplied by the number of shares. For detailed explanation, the link is mentioned in the comments. So now let's dive into the first category, that is large cap. So now the question arises as to what is large cap. From the name it is very evident, large. It means bigger sized companies. Now how do we know the size of the company? We know what is the value of the company or the size of the company based on their market cap. On the basis of market cap, we determine what is the value of the company if I want to buy an entire company right now. So, how do we define what forms or what is a part of large cap, what goes into mid cap, or what is small cap? So, basically, now if you have determined the value of the company, suppose there are three companies A, B, C. One has a market cap of suppose 100 rupees, another has 200, another has 300. Now you need to rank them with the highest one being rank 1. So if you would now rank these three companies, so C would be rank 1, followed by B, followed by A. Okay, so now you have ranked the companies based on their market cap. So the company with the highest market cap is at rank 1, followed by the company with comparatively lower market cap, then the company with the least amount of market cap out of these three companies. So similarly, what happens in a stock market or in stock exchanges, you have ranked the companies. Okay, now after ranking each and every company, you have to now determine which will form a part of my large cap. So after ranking, suppose there are 500 stocks listed in the stock exchange. Now you need to determine what will form a part of large cap. So out of these 500 stocks, the stocks with a rank of 1 to 100 usually forms a part of large cap. Okay, so the stocks with a rank of 1 to 100 forms a part of the large cap. Their market cap is usually 20,000 cr or more. Now since they are large companies, they are usually household names. Otherwise, how do you expect a company with a large share price or large number of shares floating in the market with not being credible enough or not being a part of our day-to-day lives? So they're usually a part of our day-to-day lives, and they're usually household names, and they might fluctuate in the rankings. Okay, now how can they fluctuate in the rankings? The rankings of a large cap can fluctuate mainly by share price. Usually the number of shares remains constant unless a company has splitted the shares or there's a bonus issue or something like that, but the share price fluctuates daily. So there might be a case that some companies number of shares were constant, but its share price has increased materially, like it has doubled or tripled, and it moved from a mid cap to a large cap. Okay, now there are certain kind of funds called as mutual funds who invest in these large cap companies. So the funds that invest in these large cap companies, okay, they're called as large cap funds. Means there are other funds as well that invest in large cap companies, but these funds exclusively invest in large cap companies. Okay, so the large cap funds exclusively invest in the large cap companies. Now there might be a flexi cap fund that has a certain proportion of its investment in large cap shares. Okay, but the large cap funds primarily invest in the large cap companies. So now these are the basics. Like if you are ranking the companies, the top 100 companies form a part of large cap. Usually their market cap is above 20,000 CR, they're usually a part of household name. They are means the rankings can change based on the share price. If the share price is suppose fallen materially down, so it might move from suppose a large cap to a mid cap, then to a small cap. So ideally, the rankings might change based on the movement in the share price, and they're usually very stable in nature since they're very large companies. Now let's dive further into the details of the large cap and why you should be concerned about it, like why you should know about it. So we have understood the basic characteristics that they form a part of like top 100 ranked companies are a part of large cap, and they're usually larger in size. They're usually part of our household names, or they're like a part of our day-to-day lives. Now what more? Okay. Now since these are large cap companies, okay, since they're large in size, that is they're very much stable. You can't expect a company like Reliance to fall in a single day, right? So they're very stable. They give you regular dividends. Now, what are dividends? We will be preparing a separate video on this, but for now, it is a share of profit that has been given to the shareholders for being invested in the company. So, the company has decided to distribute a part of their profits in the form of dividends. It is one way of distribution of profit. So, they are usually stable, they give regular flow of dividend, and they are less volatile. What do you mean by volatile? Volatile means change. Volatility means change. So they don't change that much. Like suppose a very small company, it might change by 10%, 20%. It might move materially, but a large company does not move that much and that very fast. Like it can't, it usually does not change by 10, 20, 30% in a day. Okay, so they're usually much more stable. They're kind of linked, stable and less volatile. But the main point is they're very much less volatile. So in case you're risk averse and you're just starting into stock market, so being invested in large cap companies is usually what people suggest. That since you are not aware of what how stock market works, so large cap is one area where people usually stay invested. But there are cons also since they're very large, so you can't expect exponential returns now. Since they've already grown in size, you can't expect exponential return. They will give you steady returns, but not an exponential returns. So that is one of the kind of like a drawback for people who are very much risk seeking in nature. So that is a brief intro about large cap. Now we will be discussing in detail about what are mid cap companies in the next video. Thank you.